to what the chair of the Finance Committee, Wayne Easter, has had to say, saying that whoever drafted your discussion paper doesn't have a clue about the amount of effort that goes into being a small business or how it's established, and called your communications plan god-awful. I mean, this isn't a small business or a doctor or a farmer. This is a Liberal caucus member who's now breaking ranks and slamming the approach here. Others have written and asked you to extend the consultation period. How do you respond to this discontent inside your own caucus?
We had a good meeting in Kelowna last week with our caucus. What we heard from people was, in some cases, a strong level of support with what we're trying to achieve. From some others, we heard some observations about what they're hearing from constituents, and that included specific concerns. It included from some people a sense that they really feel it important that we get out and communicate with Canadians. We are doing exactly that. We're out talking to Canadians this month. We're listening in our consultation process. That's, we think, very important. It's something that will continue, and of course when we're finished we'll take those observations into account as we chart our path forward.
I was speaking with the St. John's Board of Trade before your meeting. They say this is putting a lot of fear into the business community, and it will take a bite out of business owners, especially at the $73,000 mark, which is the average income of a small business owner. What do you have to say to their concerns?
I just had an opportunity to meet with the Chamber of Commerce. Clearly, there are some people out there talking about the potential impacts. We see the impacts as being important for Canada in the sense that we're dealing with tax advantages that are going to the wealthiest. For those 66% of small businesses, according to the CFIB, that are under $73,000 of income, we don't see these tax changes as having an impact. What we do see is the passive investment income issue that we're highlighting. It is really not an important impact for anybody that's earning $150,000 or less. It will have an impact on investment returns in the future for businesses that have more than $150,000 in income. And of course that grows as people have more and more income. So that's what we're trying to achieve. We're listening to people, as I was listening to small businesses with the Canadian Chamber or the St. John's Chamber of Commerce, and we'll continue to listen to make sure that we get it right.
What do you plan to do about the lack of clarity identified by Premier Dwight Ball? He says he's heard from misinformed business owners. They don't know what's going on with these changes or proposed changes. What do you plan to do to combat that?
We're going to work every day to talk to people. I spoke to the business owner that spoke to Premier Ball. I actually spoke to her this morning, walked through the changes. I can't say that she necessarily agreed with everything that we're trying to achieve, but I think she understands it. What we're trying to make sure is that for professionals and wealthy Canadians, that they don't have advantages that other Canadians don't have. This isn't intended to be about small business. It's making sure that we don't create the opportunity for people to save significantly more for their retirement inside a company than someone outside a company would be able to do. That's what we're trying to achieve.
How do you plan on fixing the problem with government's lack of clarity, though? It seems like it wasn't just business owners, it was also Premier Dwight Ball who was seeking clarification.
I spoke to Premier Ball, and as well as working with him one-on-one, and I think he understood better what we're trying to achieve. We've also sent to him a sense of our internal messaging so that he can understand how we're communicating this to Canadians.
This business owner was concerned that she might be paying the equivalent of 73% by the time all tax rates are taken into account. We've seen other people do calculations and find similar levels. What will you do to make sure that those sorts of extremely high cases don't actually happen in final implementation?
What we've said is that we believe that the small business tax rate is important. It allows small businesses to invest in their business in a way that creates incentive for them to, grow the economy, to hire people. What we're talking about here, and those calculations are looking at investment income on money that's parked passively inside their company. What we're saying is that we don't think that wealthy individuals should get a better opportunity to defer tax than other individuals if that's being used for their retirement. If it's being used for their active business, we want them to have that advantage. If it's merely to save for retirement, we want to make sure we have a retirement system that creates opportunity for all Canadians.
But do you think it's fair for those wealthy individuals to pay the equivalent of a 73% tax on those sorts of passive investments?
To be clear, what we're saying is that we don't think that people should have a disproportionate opportunity to save inside a company. If they take that money outside the company, they will have the same opportunity as other Canadians, and they will pay tax at their personal rate as they take it out, and they will pay the same rate of tax on those investments going forward.
It's fair to say, I think you would agree, that you use the term wealthy Canadians quite often. I think a wealthy person in this province would have a lot lower income than a wealthy person in British Columbia or Ontario. Yet your proposal seem to be consistent from coast to coast. What do you say to people in Newfoundland that could really be hit by this?
First, we think that, as I've mentioned, that businesses in the majority are not going to be impacted by this because their earnings are too low. That's likely to be consistent in St. John's and Newfoundland and Labrador as it is around the country. Second, we create a tax system across the country so that we can find a consistent way to have income tax across the country. We have a progressive income tax system in this country. It allows Canadians to contribute to the social well-being of the country. We know that we don't want to have a situation where some Canadians, and in particular wealthier Canadians, can find a way to shield themselves from tax, because that means other Canadians bear a greater burden. That's what we're trying to get at.
You used the $150,000 level as a bit of a dividing point, whereas these changes will not negatively impact someone. Can you explain that again, please?
What I was explaining is the passive investment income that we're getting at is really saying that we don't want people to be able to shield a significant amount of their earnings from tax such that they have a much bigger retirement opportunity than other Canadians. So in our system, you are able to put money into a registered retirement savings plan, and that amount goes up to, it's 18% of your earnings, up to $26,000. That roughly accounts for about $144,000 of that $150,000. On top of that, you're able to put money into a tax-free savings account. That's how we get to the roughly $150,000 where you have other ways to save. And then beyond that, the person that has money inside their company could possibly defer taxes on a significantly larger proportion of their income over time. That's what we're trying to get at. That's the advantage for wealthy Canadians that other Canadians can't get. And of course, it's much more significant the higher the level of income.
We're going to take two questions, just one question, no follow-ups, please. So 2 more questions and we're going to go.
How do you determine when a company has two directors, a husband and wife, a family business? Is there any mechanics in this to determine whether or not they're both? Will you look at these companies and determine if both people are putting the same amount of work in?
We're looking to ensure that for companies that are family businesses, that we recognize the contribution of family members to the business. So if a family member is working in the business, if a family member has contributed capital to the business, we want to make sure that we recognize that, and it's possible for them, therefore, to be paid out of the business. For those families that are paying people that aren't engaged in the business, they're not part of the business, they're not contributing their own labor, or they're not contributing in terms of capital, that we think is sprinkling income just a lower tax rate, creating an advantage that other people don't have. So we're listening to Canadians about how we can best make sure that works. We have some proposals in our consultation paper, and of course we're going to make sure we can do this in a way that is as administratively efficient as possible.
Last question. Okay, thanks, folks.
Or not. Thank you.